Hi everyone, today let's talk about Jerome Powell's comments, as well as the calendars, as well as seasonality. Then we'll take a quick look at the charts. Then we'll take a look at my results for the day and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Jerome Powell had to come out and walk back some of the comments from Fed Waller. People were getting a little too excited. He talked about cuts a little bit, and Jerome Powell had to come out and say it's a little premature to talk about cuts. This is what he's been saying for a while. However, markets really did look at his comments as dovish, and they did rally a little bit. Yields were down sharply on his comments, even though he's saying it's too early to talk about cuts, and he even talked about potentially having one more hike, saying that policy is still restrictive and that he still needs to get back to that 2% goal for inflation. And then he highlighted one more time that current levels are well above the central bank's goal of 2%, but it does still seem like we're going to get a pause here at the next FOMC meeting, which is on the 12th and 13th. Moving over to the calendars, ISM manufacturing PMI and prices came in well below the 50 mark. Prices were better than the forecast, but that's not really what we want to see with inflation. Atlanta Fed GDP numbers were also worse than expectations. Not great across the board here for economic factors. And today I went ahead and subscribed to the Almanac Trader, so I'll be including some of his information. And this gives us some metrics for seasonality, and you can see here, generally markets have a good end of the year starting around 18 or 19 December, and they rally from there. But between the 1st and the 18th, they're generally a little bit choppy, if not moving a little bit lower. You can see the Dow Jones pre-election year is one of the better performers, and overall pre-election years in general have a good end of the year, whereas they're a little bit weaker during the election years, which is what we're going to see next year. Taking a look at Max Pain, you can see we finished well above Max Pain and well above that 455 call strike. Could not get above 460, but I was honestly surprised we held above 455. Got a bit of a dip early in the session, and then we rallied through to the end of the session once again. We'll take a look at that on the charts. Still not as aggressive as we had been seeing at the top of the puts, but still bullish overall, even with a big put-call ratio and lots of options in the market. And moving over to the charts, you can see what I was talking about. We fell into the pre-market, tested that trend support, held that level, and then rallied through basically throughout the day. The SPY looked a lot more bullish than the Russell, and you can see momentum on the daily chart was basically flat, volume picking up on this up move. So everything says that this is set to go higher. Next resistance for me up around 463.70, right at that trend line as well. Does seem like we could get there with this strong close and being up a little bit after hours. Everything does look okay there. On the day we were up 0.59%, still super overbought, but that doesn't mean we can't go higher. Again, a really strong weekly close. Moving over to the NASDAQ, like I talked about, this was quite a bit weaker. Fell into the pre-market, threw some wicks to this previous low, and I did adjust this level down to these lows here at 386.20. Does seem like a little bit better level. And then I adjusted this one as well, 389.15, kind of in this mid-range. Not big adjustments on those, but it does seem a little bit more relevant. And then once we tested those levels on those wicks, you could see a higher low close with wicks testing that double bottom. So both of these looked strong. Once that started to follow through here, I started to adjust that position up a little bit. Everything still looks clean to the upside. And looking at momentum, you can see we just barely avoided bearish momentum. Still slightly bullish. RSI still does not look great, and volume was down today. So not exactly what you would want to see, but overall still okay, 0.29% to the upside. We are up a little bit more after hours, about 70 cents. You can see that rallying through here. Next level for me, 392.35. Moving over to the Russell and the Dow, you can see the Russell had a massive day, almost 3%, took out a whole bunch of levels, pushed through these EMAs and SMAs, well above all of them now. Next level for me, 185.63. We are just about 50 cents off of that level, and everything looks super bullish here. We said it looked a little bit bullish over the last 2 days as it continued to push towards those levels, and then we got bullish momentum, massive volume. Everything looks super clean on the Russell. We talked about the Russell outperforming, and this exceeded my expectations. We were right on the money here with the Russell being the best performer, and then looking at the Dow, absolutely colossal over the last 2 days, 1.5% and then 0.85% here today. Continues to take out these levels. Scrolling out here, you can see the Dow is almost to the peaks here from early November of 21, and then we would be at all-time highs here in January of 22. The Dow surging towards those highs. taking out these August highs. Everything looks clean on both of these to the upside. And it is interesting to see this while tech is lagging. Moving over to Apple and Tesla. Apple had a pretty good day. You can see that first candle was 0.78% to the upside, took out this level after breaking below it in the pre-market, tested the 55, held that level, turned more bullish momentum, RSI looking slightly more bullish. Still in this range. We did not break out here by any means, but as long as we stay above 189.96 or that 190 level, then everything still looks okay, and this does look much stronger here today than previous. We did get above this previous kind of mid pivot point, but like I said, not above these previous highs yet. Tesla did throw a wick down to 232.57. We've been talking about that level for a while, continues to respect that. Tested it, rallied up slightly, but not super convincing. You can see we're still below trend, still below the 9 and 21 EMAs. And if we did get a rejection here, it would not surprise me. Still in consolidation with no clear direction. Let's go ahead and take a look at the worst performers. We got Meta and Microsoft out of the big tech stocks. Meta down 0.71, tested 321.68. As long as we hold that level, we'll be okay. Doesn't seem like it's going to happen with bearish momentum, bearish RSI. It does seem like we're due for a little bit bigger pullback there. Similarly here on Microsoft, 1.16% to the downside. Tested that 372.08 level. Then we're looking at the 21 EMA below that, 369.70. And just like on Meta, momentum and RSI both look weak, with increasing volume on that down move. Moving over to staples and discretionaries, both of these broke higher here today. Staples finally hit that price target at 70.85, broke out above that level, closed above it, bullish momentum, bullish RSI, everything looks good on this rally to continue. Next level is 72.50. Might find some resistance at these previous lows around 71.42 or so, but for me 72.50 does make sense as long as we can hold above 70.85. And then looking at discretionaries, again, broke above my 170.68 level. This time we got to close above it versus this previous test and breakdown. Next level for me, 174.76. Moving over to breadth just for a moment. No big surprises here with the surge on the Russell and the Dow. Breadth is broadening, continues to go higher. If the 50 hits this 92.25 area, that's going to be interesting. That's typically where we start to find some reversals on the 50-day breadth. 200-day still has a little bit of room. 76.04 is a very powerful level. We broke down significantly from there before. Tested it here in February of 23 also. Doesn't mean we can't get above it. All-time highs, we did break above it. Got into this 91 range. Couldn't get any further above that. And then we started to see breadth decay from there. But definitely something to keep in mind. Doesn't mean we can't go higher, but a couple of critical levels to our upside. Moving over to yields, these continue to break down super aggressively. 2-year down 3%, 10-year down 3% as well, touching that 144 EMA. I was a little bit surprised by this. I thought Jerome Powell's comments were a little bit more hawkish, but the markets disagreed and yields sold off and bonds went higher. Moving over to the VIX, you can see we got a retest of that SMA on the RSI and broke down from there a little bit. We're still at a higher RSI read with similar prices, so could be forming a little bit of divergence. Interesting. Doesn't mean we can't go higher. This could absolutely break down further into oversold conditions, but we're still chopping in this same range. Still very much a downtrend. I'm a little bit surprised this didn't break down further with the aggressiveness that we were seeing across markets to the upside. And then you can see momentum here basically at zero. Didn't get to bullish, but about 1 or 2 more days, and then you would expect this to start to flip into green territory and then get a little bit choppy unless we see a spike higher. Moving over to my accounts, I had a pretty good day. I'm not sure exactly how they do these calculations, but we'll see how this plays out. Current accounts at 108.403, which is about a $700 profit. I guess that makes sense based on this number. You can see that big move on the Russell. I rolled up and out pretty significantly up to 182 for $3.75 credit, which puts my max profit there at 185.75. So I have just a little bit of room there for 7 days. If we continue to bump into my max profit, I'll continue to roll up and out. This won't last forever, and I do want to have a little protection on that downside. But obviously right now, super bullish on the Russell, and looking at the NASDAQ, 1.1% to the upside makes sense. And I did roll up and out to 386 once again for December 6th. I continue to chop on this position. And then looking at this 385, I can't really do anything with that right now. I could roll it up and out, but you have to go pretty far out because we're already at 14 days. And I don't really want to go any further out. So I'll continue to leave it alone unless markets go bananas. And then I can go a little bit further out potentially to give myself a little bit more profit. potential to the upside. Right now, it's given me a pretty good protection, even with the choppiness and upside. In terms of max profit on the NASDAQ, currently sitting at 391.24 on this position and 397 on this position. Overall bullish going into Monday. Let me know down in the comment section what you thought of Jerome Powell's comments and the market's reaction to it. Honestly, I thought it was a little bit disjointed, but definitely let me know your feedback. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.